Hello, everyone. Yes, we're going to be discussing asset tokenization today, the hot crypto buzzword that everyone is talking about. First of all, we're just going to go across the row and introduce ourselves. My name's Kieran. I'm a journalist at Cointelegraph. We'll start with you, Andrew.
Hey, everybody. My name is Andrew Durgee. I'm co-CEO of Republic.
Hey, guys. My name is Teddy. I'm the co-founder of Plume.
And then my name is Aya, and I'm the co-founder of Upshift, an on-chain yield and vault platform.
Thank you very much. And I think we're going to go straight into it. How do we all see tokenization impacting traditional financial markets over the next 3 to 5 years? Start with you, Aya.
Yeah, so it's been pretty interesting because I know the last panel talked about incumbents. We've seen a number of them come in after the success of BlackRock's Biddle. And really the main purpose that they're looking for is, one, how do we create cheaper operational backends, which digital asset infrastructure can definitely do. And then the second is also cheaper on-chain capital. And so what we've seen is actually an influx of these incumbents come on-chain in order to tokenize different assets and asset issuers in order to get additional cheap credit markets that are also 24/7 readily available. And so we expect to continue to see that happen at scale. And also they expand into net new markets and new users. Obviously quite a few of that is happening on Plume as well.
Yeah, I think from our side, it's pretty interesting. I feel like a lot of the folks we work with, like on the more institutional front, I think initially it was, how do I save money on overhead costs? But now it's how do I actually make more money? Like I feel like these institutional partners are now on Plume to actually really make money and utilize their assets in a different way. Like, recently we just announced accred, one of our investors, Apollo, they just deployed their private credit fund on the Plume. And I think their whole story is, how do I actually take this asset, collateralize it on one of our lending protocols in Plume and really borrow against it and then use this money elsewhere.
So just for the audience as well, can you just give a bit of background into how Plume relates to asset tokenization as well, the work you guys are doing?
Yeah, of course. So on a very high level, what we're building is an open blockchain. Permissionless blockchain focused on tokenizing real-world assets with DeFi at the core. I would say there's kind of 3 things we're really focused on. 1 is infrastructure, 2 is distribution, and 3 is composability. So on the infrastructure side, we've built all these different toolings to bring anything on-chain, whether it's like esoteric data sets, physical assets, and I think the biggest question we typically get is, when the assets are on Plume, how do you actually find them real users? I think the biggest issue in real-world assets is that there's no users, really. There's no true demand. So what we've done differently is built an entire ecosystem centered around this, where we can actually find true demand by integrating with different exchanges, different custodians. We work with some folks in Asia that don't even speak a word of English, but they're now pivoting towards RWAs. And they want to do this in a very DeFi native manner. So kind of like the third point I want to talk about of what we're building at Plume is really making RWAs feel more like crypto and less like TradFi products. And I think that's kind of how we've seen so much success on the go-to-market side. Right now we're the #1 chain by worldwide asset wallet holders. I think the space only has 390K holders. 200,000 of them are on Plume. And the way we've been able to do that was by creating these different products where they can actually, for example, buy an asset, collateralize it somewhere else, and then start doing these looping strategies.
Amazing. And how about yourself, Andrew? How do you see it impacting financial markets in the next few years?
When you look at the traditional markets, it's really 3 main pieces that are looking at: speed, price, scale. And when speed metrics, price metrics, and scaling became real optionality as it relates to digital assets, that's when you start to see the traditional businesses really start to move in. You mix that with the fact that the regulatory frameworks, particularly in the US, are extremely more favorable than they were in the past, and that's what really kind of creates this nexus now of change. And it's everybody. Every major institution now has some type of blockchain team or digital asset team, every major bank, and as we've seen that transition now over time, it's gone from being maybe something that was a trend to now the reality. And so we're going to start to see that impact across not only traditional financial institutions, but you're going to see that moving from institutions into QPs, into accredited, into retail, and down the entire stack.
Cool. We'll go back to you as well. With August, first of all, did you want to give a bit of a background into the relationship there with asset tokenization, and I guess as well the low-hanging fruits of what assets will be tokenized in the next few years too?
Yeah, sure. So on the August side, that's our on-chain prime business. So think of a composable and capital-efficient way to do trading, borrow, lending, and execution all in one place. And for Upshift, we've been able to take the infrastructure we built on the August side for institutions and expand it to a far broader reach of users on the retail side. And really what's happened is almost a vaultification, if you will, where people have been able to find different esoteric strategies, tokenize them, and make them composable across ecosystems, across chains, across CeFi and DeFi, and make it capital efficient. So, for us, predominantly what's been very interesting is initially you had asset issuers who were pushing a lot of the tokenization narratives. Now you're having, anywhere between crypto funds, both on liquid, and even seeing some larger lockups on venture, tokenize, their strategies and make it accessible to folks who maybe wouldn't be able to get access to those underlying strategies themselves. And then we're seeing the composability wheel. And this is really important because, we historically, if you were just depending on, CeFi lending markets or OTC lending markets, you really just wouldn't be able to find that unlock for specific strategies that are bundled in the way that tokenization enables. And so what we've been able to see is, we've seen funds who deposit, call it $20 million into a basket of strategies, they tokenize it, they make it composable, and they're able to leverage loop that with risk mitigations in order to turn that into 80 million. And that allows them to raise capital in existing markets today, and it really shows that something's durable at scale. And so we've seen a lot of instances where now these larger asset issuers have said, okay, this looks really interesting and we can make money here. There's clear money and new markets that we can enter. How do we also deploy that flywheel? And so that's where we've played a pretty large part.
Amazing. I guess beyond efficiency and liquidity, what new business models become possible when assets are tokenized?
Yeah, I think you're starting to see new asset classes that become accessible to people that have never been able to touch them before. And for us, obviously at Republic, tokenization and a lot of these retail-oriented assets are a huge priority, whether we're tokenizing film, music, sports. We've recently tokenized shares in SpaceX and OpenAI that allow retail to be able to participate into this asset class that they haven't before, and how that's represented and how that's looked at is all different. These are really exposure to an asset class more so than anything else. And as we break down that barrier, you're looking at the monetization of these assets that before have been looked at very, very differently.
Absolutely. And
yeah, I think accessibility is a pretty big piece. I think when people think of RWAs, they only think of treasuries or private credit, but there's a whole other spectrum.
It's so funny because I go the total opposite direction.
No, exactly. And I think it's partly because of what you guys are doing. Yeah. It's very innovative. I think our teams have spoken before about tokenizing different types of assets, and on Plume, we have almost a marketplace of all these different types of basket of goods and assets, and we're seeing people tokenize GPUs as well as solar panels. We even have some folks tokenizing a durian farm in Southeast Asia, all the way to camel farms in Dubai. So it gets pretty crazy, I think. But I think that the nice thing is being able to actually access these markets. There was this asset we took on chain called Mineral Vault. It's basically we tokenized mineral interests in Texas, and I think for this private equity fund, I think they only had around 800,000 people buying these in I think it was over the span of 10 years. Ever since they deployed on Plume, within 3 months of our mainnet being live, there's around 80,000 holders in this specific asset. So we're really kind of democratizing access to all these different assets, and I think that's the beauty of tokenization.
Wow, and I think, to kind of ramp up the conversation, I'd love to hear from all three of you on the main technical challenges that I guess are preventing the wider adoption of asset tokenization right now.
I think the largest issue, which is being solved, and just to plug our Republic, we're one of the ones that have solved it, is in the past, if you wanted to touch a lot of real-world assets, you'd have to work with a lot of different vendors, right? You'd have to work with a tokenization company. You'd have to work with a primary issuance company. You'd have to work with a wallet company. You'd have to work with a custodian. You'd have to work with a transfer agent. You'd have to work with a secondary market. And you'd have to pass KYC or KYB every time, right? So that became very, very, very difficult. So now you've started to see a lot of those environments start to collapse. So we collapsed at Republic, we collapsed that entire stack where you just need one account at Republic and you can access all those things. Actually very similar to maybe what like Morgan Stanley or Fidelity did with primary brokerage, right? So that becomes a lot less friction forward in order to be able to participate in those types of assets. And you'll see a lot more people going in this direction because it's just been such a gating item for both individuals and businesses.
Yeah, I mean, I think I agree. I think kind of like I remember when we started Plume, there were folks that were saying that it would take like anywhere between like 6 or 12 months to bring like specific assets on chain, and kind of like what Andrew was saying, like at Plume, what we've done is also kind of like almost automated that stack and make it very easy for anyone to kind of come in, look at the different modular compliance pieces. Like for example, like on Plume, even though we're a permissionless chain, we have AML at the sequencer level, we have KYC at the protocol level. Our main product Nest, we can do whitelist, blacklisting, freeze and seize capabilities. So our general counsel actually came from the SEC, so he's been very on top of the compliance stack for us. And I think having a chain that can kind of have access to the broader distribution while also maintaining compliance at a certain level has been a pretty differentiating factor for us to work with other partners.
Amazing. And how about yourself, AR?
Yeah, I would say, very similar to what you both mentioned. There are kind of two categories for us. The first is really looking at the stack around execution. So today we're integrated into 22 blockchains. We underwrite over 350 assets, and we're integrated into over 75 protocols. And so, today, if you're running DeFi strategies, it's very much a full-time job, and it requires a team of people who can look at, different chains, different protocols, different point farming, strategies, and yield farming strategies. And for us, what we've noticed is even on the institutional side, someone may be, exceptional at Solana, but doesn't have the bandwidth for EVM, or vice versa. And so, being able to combine that stack in one place and then making it composable. And composability is the second piece, because I think, people will talk about tokenization all the time, but then they don't talk about what happens once you hold the asset. And a lot of times, a number of these assets, are not necessarily composable with the broader market, which I think Plume is addressing in a really great way. And then, if you look at even the Republic ecosystem, you can do quite a bit with the assets when they're tokenized. But more broadly, if you have an asset that maybe has a 6-month lockup or liquidity only, call it once every 30 days, what do you do with the asset other than holding the underlying equity? And so for us, a lot of the flywheel that we look at is the composability side, is building short-term repo for some of these, more illiquid products, and finding ways to make it, again, taking a non-24/7 trading asset into a 24/7 trading world.
No, thank you so much. I think it's really insightful comments from all three executives here. So how about a round of applause for all three panelists on asset tokenization? Thanks very much.
Wow. That was a fantastic discussion, just like our moderator